Jobby markets are expected in a high inflationary environment, and that's what the top 100 have been doing on the ASX. Today we're going to explore the commodities index, how gold is setting up for strong trades, and whether the markets can turn on the equinox. It's been a very reliable signal for the last few years. Also, we're going to look at the top trading shares this week. The one guiding us through is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, good, Chris. Yeah, big going on in there last week. So
there's a lot, and I like that you've pulled out the CRB index to have a look at the commodities, because when we look at, you and I talk about off air a fair bit, the leading themes on the market, and you pulled out a few aspects. There've been a lot of commodities in the last few weeks, and then also somehow financial services have been in there. So you've got some top trading shares this week that we'll cover. But when you mentioned a lot's happened this week, when we have a look at the charts, if we jump straight to the NASDAQ, which is that's probably been the most volatile in the last week. How does this big down week, ending in the lows, ending at the lows, retesting lows, how does that update your outlook for the NASDAQ?
yeah, so like the NASDAQ has had probably the most distribution days, Chris, on the way back in. So I think we had about 6 distribution days off that lower right shoulder there. So out of the last 3 weeks, they've had sort of 6 days there where the volume's been heavier than the previous day, and then obviously finishing down, obviously being below the previous low there. So that's you do normally see a bit of a cluster of 4 or 5 there before you sort of see a heavier sell-off there. So that is a definite negative for the NASDAQ there. But the market sort of did get sort of spooked by inflation concerns there, which is sort of, if we do have inflation coming back there, then growth is probably going to take a bit more of a hit, because obviously we know growth stocks will generally underperform a little bit, and that sort of high inflation there. So that does sort of show that there. And then obviously the market's getting concerned about inflation now. We're seeing obviously commodity prices have sort of been rolling back. Obviously the oil price is pretty high. Quite a few other commodity prices are still pretty buoyant. So that does sort of add to inflation concerns there. So I think that a few inflation markets around the globe there, I think Korea and Canada were higher than previous counts there. So that's just got the market a little nervous, a little spooked that inflation might be sort of coming back here. So look, historically we know inflation is very sticky, hard to sort of turn around. Central banks should not be in a hurry to cut rates, even though inflation's come off, which Powell hasn't been. So his rhetoric is that he's learnt from the past, in that everyone thinks inflation's curbed here now, and then we can basically start to cut rates. Historically, that's been a mistake which central banks have made too early in the past, and then inflation's come rearing back here. So best to keep the foot on the throat of inflation, keep rates reasonably sort of high, or don't cut them too early. Make sure you sort of do stamp inflation out. So central banks have done that here, which is good. Obviously, you'll get a few little ups and downs here. So I still think it's okay out there, but the market just got a little bit spooked by those inflation numbers and some of those, obviously just things like the oil price and a few of those commodities. So that's probably the reason for the sell-off here. So it's hard to sort of read into it there. I guess you do have a little bit of an ABC pullback there. Have come back into the equinox, which is a lot of markets will, in choppier markets there, find the equinox or the solstice can be sort of important turning points as well. So our market really turned quite sharply on the equinox low there in reverse. So that's kind of a good sign for our market, but it does happen a lot. And I think we sort of covered this on Friday there, Chris, as well. Just a lot of big turns in the last, in recent years on those times. They're probably around 80 to 85% likely to have a turn on there. So probably 70% probably big turns, and maybe sort of like 15% of the time maybe sort of smaller turns, and maybe only 10 to 15% of the time where we don't get a turn. So just something to keep an eye on here. The reality is I still think we're in a bit of a sidewaysy sort of market, which is classic sort of high inflationary sort of style behaviour. Small caps definitely underperforming. I know everyone keeps thinking, we should be going for small caps there, but history tells us to stay away from small caps in high inflationary environment. Commodities and value shares, that's the 2 safest places to be. So we're looking for sort of maybe some of the commodities that have sort of come off maybe, and looking for value shares that have probably come off as well. That's probably where we should be looking.
Well, that's definitely sounds like a list you've put together over the last couple of weeks, what you've been looking at. And probably should say that at the end of the video, we'll go into, you've been into more detail into what happens in inflationary environments. So we have a link to the whole playlist over there of what you've done. We did skip over just the S&P 500. So we went to the NASDAQ, more volatile, inflation fears have pulled that down. 6 distribution days, ABC showing up there. We went to the Aussie because the Equinox sort of pivotal point, which may have been a low for us. In between, we've got the S&P 500 in your weekly report. That's still showing a heavy down day. Its low looks to have closed below the prior low. So what impact is that having on the chart and the technical aspects of the S&P 500?
Yeah, so the question is it just a classic, ABC correction, little three-wave, which is the most common pullback in markets? Or is it sort of something bigger there? It's got less distribution days, so probably slightly less aggressive selling on the S&P 500, although the Dow even less again. So, which kind of more it does sort of fall into that inflation rhetoric there. Obviously, that's sort of why the growth stocks are sold off a little bit harder than maybe the value shares as well. So, so sort of there's sort of some commonality there, but I guess. Just got to watch here this week. Yeah, I think it's important to sort of turn here. I'd really be looking at the probably the low on that Equinox there. Don't want to see that sort of broken there for markets really as well. We just don't want to. We probably need to see a reversal week here this week here off that lows. It's okay to get your low ABCs and stuff in there, but yeah, I mean, look, the only negative there, Chris, is that. Has broken down. There's a few distribution days there that's negative. The rally here compared to previous sort of pre-election years and third years is a little bit underwhelming as well. So that hasn't been a strong, robust there. So that's probably another negative there. Just most of our cycles are still sort of pretty choppy between July and October, which we're right in the heart of here. So it might just be a classic choppy period here. But yeah, we do need to sort of show signs of bouncing here. So I still think we can probably recover here and finish the year strong here. But we're not sort of showing the same sort of strength of other cycles there.
Okay, so not seeing that good strength, which was historically, I think from memory in your previous reports, 48% or something like that for the 13 or 14 months from the October low in the decennial cycle or the presidential cycle, wasn't it?
Yeah, and much more bullish, much more, for the S&P and the Dow there as well. I mean, like the ASX, the XJO is probably the most interesting because it hasn't had many distribution days at all. So, so even though we've sort of come back there, we've actually shown some good volume days off the lows, sort of bounced. So even the Equinox, the day of the low, that obviously finished pretty high, and that was a good volume day. So they actually showed good buying off that low. And the previous couple of weeks, the previous 2 up weeks were on good volume, and the hour week was on lighter volume. So, so maybe that's around commodities as well. Obviously, inflation is going to remain high. That's probably supportive of commodity stocks as well. I saw the FTSE, which has got a lot of energy stocks in it. That's still pretty buoyant as well. That's actually one of the sort of stronger looking indices as well. So, but yeah, it's a real mixed bag out there. So, so that kind of more fits into the inflationary sort of side here. So if we just, I know we showed that chart ages ago, about all the sectors which perform well in inflation and stuff like that, but that, we showed that a year ago, Chris, or 18 months ago, and that's, to be honest with you, it's been a blueprint, really. So, it's just
did that folding in our market and across the globe, hasn't it?
Yeah. So, so we just got to keep to that. That's why I'm interested in sort of gold here. Gold sort of contracted last night, so but gold's still got that little that VCP sort of pattern is still intact here. So, it'd be interesting to see how this contracts. Because interesting thing is, like a lot of the gold stocks are actually been holding up pretty well here, while the gold price has been sort of contracting. So that's still pretty encouraging there. So yeah, I'm still watching those gold stocks closely there, just because, I think, just noticed the spot gold was sort of in that third wave of that BCP, so the classic. So it might have one more contraction back here and then turn here, but yeah, it's. I think it's definitely definitely a sector to keep a close eye on here, because there's been a few of the gold stocks that have actually punched out the top and have remained pretty firm. A few that have come back a bit weaker, but yeah, some interesting price action there. So,
good risk for the upside on the gold sectors.
Yeah, just that gold price there is just interesting price action. It's just a big VCP on the sort of weekly and monthly as well. So that's interesting price action from a larger scale there. So much as still contracting here, that's the sector just to keep a close eye on there.
Well, before we move into the other indices, you've got the Shanghai as well as the CRB index. We just round out on the Dow Jones. You did say that was seeing less distribution days than the other indices, was it?
Yeah, so even at sort of weak years, they come back below the low there. The selling pressure hasn't been as aggressive as the Nasdaq. Less distribution days in there. So, so it's just more of a messy sort of gap. But look, at the end of the day, the price action's a bit negative, coming back below that sort of key zone here. That's why we don't want to sort of see it down here too long. It does need to sort of hold that level here. So just from a trend point of view, it doesn't look that strong. A little bit negative here, but we probably just need to sort of see it turn here. Otherwise, we might be worried about this maybe drifting lower here.
Okay, well, let's move to the CRB, because you're talking about inflation and bullish breakouts negative for inflation. As you said, this week we've had a few international markers that have been negative for inflation. It did have sort of a wedging pattern that you've kind of highlighted the straight lines, but it's congested and then broken out on the top side as the market has been coming down. So is there a bit of a correlation with sort of these going up, the market having the inflationary fears and coming down a bit? Is it sort of
Yeah, so it's had a bit of a breather here, the commodities basket. So this is the basket of all the commodities. So it's sort of come back, retraced from early 2022. So it's basically had like a year, only 12 months sort of cooling off here, which is coincided with inflation pressures cooling off as well around the same time. But we have started to break up here, and that's got the market a little spooked here regarding inflationary pressures as well. Because obviously, if the cost of commodity prices go up here, things like oil, things like that does put pressure on inflation there. So that does have the market a little spooked there, but that obviously be positive for elements of the Aussie market, and we've got a lot of commodity resource-based stocks there as well. So just be watching the different components within the commodities basket there, which ones, because we know sort of with that commodities basket, they're not all going up at the same time there. Going to be a bit of a rotation there, but that does sort of show that the basket's generally pretty strong. But yeah, so oil prices had a bit of a pretty strong run here recently. I'm always wary of it from September. If you look at actually like seasonally, sort of September through to December is actually like some of the biggest correction in oil stocks have come in the last 3 months of the year. So it's always actually a period to be nervous. It doesn't always happen. Like in the last year or two, it probably hasn't worked out so well. But yeah, it's interesting. We're probably going the other way here at the moment. But yeah, just got to respect that sort of an inflationary period there. That energy, precious metals commodities do pretty well that period. So that's the positive for kind of resource and commodity sort of stocks here, is that if those prices stay high, that'll be probably good for that sector.
Well, definitely when the commodity prices are high, that benefits the Australian economy. Part of that can come off the back of growth numbers coming out of China being positive, Chinese stimulus. You've got the Shanghai index in here, so that sort of puts all of it into the boiling pot and shows up in the commodity market, in the equities markets. This chart here, it's a monthly chart, so we're going back a long time. We've got that 506, that exponential blow off top that you've covered many times before, and then a follow up once again. But this volatility seems to have sort of been contracting, and this seems very muted from a volatility perspective compared to the previous decade or two. So What's the overarching picture that you pull out in the context of the current market environment?
Yeah, look, just a few times in the past, Chris, I've sort of watched this long-term support line here and had some pretty decent bounces sort of off that level. And if you think about the rhetoric at the moment, obviously, China's, in a hole here, and so it's very negative language regarding the Chinese economy currently. And obviously you got the property sector concerns there, obviously Evergrande, and obviously they've had those extended lockdowns in China as well. So really some negative pressures there. But the thing is, that the government has sort of stepped in here, and it's doing some, there's a bit of stimulus going on there, sort of, removing stamp duty, opening lending standards there, sort of, reducing the, loosening the sort of, stands required from sort of the, financial intermediary doing the lending and stuff there. So trying to loosen that up. So they are trying to stimulate their economy there. So if you go back and sort of, I listen to a lot of, trading podcasts and listen to books and stuff from a long time ago in history as well. And oftentimes when the government steps in and starts to, add some stimulus there, that often can be the turning point for those economies to sort of change and shift and get a bit more for them. So I think here there's, that negative, the pessimism is pretty high for the Chinese sort of market here. And you got the government stepping in to sort of help as well. So those are two good markers that I think of basically sort of when you get a shift in the trend a little bit as well, and can get some support for Asian equities there. So I do like the look of this here, just the right type of noise at the moment, and the right things happening there for to impact the change there.
So that's a good market from an international perspective. You talk about inflation and commodities. If we shift the focus back domestically, look at the Aussie market and try to find some trading opportunities. You've started off this week in the trading shares component of your report with Pinnacle Investment, P&I. Now, what I'm noticing here is the markups that you've got is sort of 1, 2, 3 sort of pullbacks, contractions. They appear to be getting smaller. And right now, we're sort of, what you and I discuss quite often is a coiling happening here. And I'm also noticing, while it's a weekly, it's showing to be on the 50-day or 50-week moving average. So what's happening here in this chart?
Yeah, no, you've covered it completely. So have sort of going on there. So we've got our each sort of pullback getting smaller and smaller. Had pretty good volume too on a lot of those rallies, and we're seeing the volume definitely dry up on the pullbacks there. Just look at the last sort of 4 or 5 weeks into that low there recently. The volume basically sort of dried up, incredibly there, and really only sort of didn't. The only volume sort of came in there was probably the week of the low there, just recently. We started to see a little bit of volume sort of come back in here. So nice tight price action there, sitting on top of the 50-day. It's probably a 50-week moving average here in this case here. But yeah, just nice sort of tight price action there. And like a lot of those sort of fund managers, sort of investment managers have sort of come under pressure there. We started to see a few of them actually starting to sort of, just because like a lot of the closed funds have really got to a fairly large discount there recently. And then I noticed quite a few of them are buying each other just because they're, at a fair discount. So, and they have started to improve, and they've actually been holding up pretty well. And the market's been weak as well. So it's, definitely a little bit of outperformance there. They've probably been lagging there. I think one of those things is, Chris, there's just so many closed funds, so many ETFs and stuff out there as well. So, just a lot to choose from there, which has sort of meant that some of those have been trading at a fair discount to their NTA. So, I mean, you can buy a lot of these assets as closed funds there for, I know Jeff Wilson used to sort of say if you could buy them for 90 cents on the dollar, you'd always be buying them. But at the moment, there's a lot of them are trading around, 85 cents on the dollar. So there's a fairly substantial discount for a lot of them there. And, the market chasing yield and stuff there, there's some, like a lot of them are sort of yielding at 5-6%, probably franked as well. So there's some decent value there, some of those shares. So the P&I, I just think, this price action looks pretty encouraging to me. Looks pretty positive. I noticed that Perpetual is not obviously showing the same sort of strength there, but it has come back and retested the recent lows. I do like those sort of false breaks there. There's some good volume at the low as well, Chris. So it sort of looks like a bit of accumulation there. And Perpetual there was the one that was sort of under offer there from, I think Regal there tried to look at this previously as a bit of a takeover target. And you can get rationalisation in this industry as well when there's value around. So so I think this looks pretty interesting as well. Just that volume there. The volume was pretty big here the last 2 or 3 weeks. So that's that's pretty interesting there. This has been on the radar there previously. So I do like that as well.
Yeah, well, if we move from the financial services, and then we have a recheck on the healthcare, because you've had a look at the healthcare a little bit over the last couple of weeks, kept them on your radar, kept them on the short list, continue to investigate, have a look at them. You've looked at the ranges before with Ramsay Healthcare and some previous recordings from the last couple of weeks. We didn't quite get down to retest that recent low, 46.12 you've got marked up on the chart. We've had that solid drop, and then we've had inside weeks, which is understandable for such a wide range in that big black candle. But what's happening here with this volume and the behaviour in this part of the chart?
Yeah, I had a few losses actually on the healthcare. It's probably been the sector which has probably let down the most here in the last 6 months. They've been pretty weak there. So a lot of those healthcare stocks are really taken pretty hard hit there. That the XHJ, which is the healthcare index as well, that's come back to something like 3 or 4 year lows and stuff as well. So that's really, really deep low there. So that's, in terms of our starting to see a bit of value emerge in there. Sort of those things are getting compressed there. The yield's obviously starting to improve. So definitely some value emerging across that sector there, and some pretty good companies as well. So just notice Ramsay there, the last sort of 4 or 5 weeks there, it's definitely seen a really big uptick in the volume there at those lows there. So that's usually a sort of sign of accumulation there. So I thought it might come back to retest the old low. I do love to sort of see them when they get on margin new high, they'll often come back to margin new low. So we got close there, just didn't quite get there. Maybe I'm wrong, maybe to still come back here, but that volume is definitely showing it, some signs of accumulation taking place there. So that's pretty robust there. And if you look at, Ramsay historically there, it tends to sort of, its personality is to come out of these lows pretty quickly. Doesn't seem to sort of build a lot, in the past there. It's not a sort of slow sort of build or, it's a bit, it kind of reminds me a little bit. Yeah, a bit like, Elders, which is sort of agricultural stock there. It's got a lot of V-shaped sort of highs and lows as well. So it's just, you got to sort of learn the personality of these stocks here. But this is the one that can have a pretty sharp bounce here. So just some good signs here that some accumulation is taking place there for that stock here. So it's just got a history of bouncing pretty hard here. So I do like that one. Look at that one here, yeah.
Well, if we move to the next one, completely different sector, but Endeavour, EDV, and you've got 1, 2, 3 on the chart. These 1, 2, 3 are lower. So it's not the 0, 1, 2, 3 bottom. Is this 3 thrust, the opposite to the 3 thrust high?
Yeah, it's obviously your 0, 1, 2, 3 is sort of like more your base building, sort of starting to build a few higher lows and then move forward there. There's sort of what they call a broadening sort of top or a broadening bottom there, is when you sort of get an overlapping nature. So you might have been trending down pretty hard for a while. You might even have sort of spacing or, having fast trends there. But when they start to overlap, so basically they pull back, so it's sort of gone to a new low, then we pull back in the trend, then we go slightly lower, and then we pull back in the range again. So you're not leaving spacing or not leaving sitting on top of the trend. You're actually coming back in there. So that's actually showing us here that the downward momentum actually is losing its sort of power there. Each bounce is sort of coming back into the range. So oftentimes you'll sort of see this little 1, 2, 3 overlapping lows or highs, then big turning points. Occasionally, I'd say 3/4 of the time you get this sort of third sort of sort of crest or trough is the low. Every now and again you see a fourth one. Now I think Elders might have had a fourth one there recently. BHP's done a lot of threes, but sometimes it's done the fourth as well for a high. But you can see the volumes is picking up too towards the lows as well. So starting to see, the volume increase there, which is again sort of signs of accumulation starting to take place. And, this aggressive selling, which has been going on for the last year here, is definitely sort of slowing down here. We're just starting to see some accumulation taking place here. So, bit bottom fishing here, Chris, but that's a McLaren thing there, is about that trend structure there. That just that shows you there that the bearish trend is actually losing its momentum. That's basically what it's telling us.
Well, that's positive to many listeners here. I'm sure about that. But you still have a few other shares that we'll look at. Still at the lower end of the chart. So we've got corporate travel, but this one's quite surprising. You've got the Fibonacci ranges here. So you've got the blue lines being 0 at the high, the other blue line at the low, and this shows the retracement. So if that's 100% of the range, we've come back here almost 75%. I remember a couple of weeks ago you were talking about these markers here, 61.8, 75. But what's really catching my eye is this massive candle, this huge range, opening at the low, closing right near the high, and you've highlighted here big volume. So how's this all coming together with the ranges, the Fibonacci levels, the wide range of the candle and the volume? What's all that telling you?
Yeah, that's really the only redeeming feature, is that sort of that bullish engulfing there on a bit of volume there. But I guess it comes out of this sort of you are in this range-bound market there. We're seeing big swings back and forth. And to me, probably a little bit of a bias here is that I do think that corporate travel is probably one of the best managed travel companies. It was the only travel company that I could think of there that didn't go to market and have to raise money, and was able to, see itself through the pandemic without having to tap shareholders up for more capital there. That tells you how tight this thing is managed there. So still pretty buoyant, the sort of travel sector there. I think you've seen a little bit of heat come off there. Probably Qantas has, got a little bit of a stir there. Obviously maybe a bit of profit taking as well. But yeah, you definitely have seen some big moves in the ranges there. So oftentimes with industrials, like sort of good quality industrials there, if you get like a 50 or the 61.8 retracement there on your sort of daily and weekly, so that's probably pretty large there. They don't tend to push past that too often. So we've just undercut the 61.8 here. So I just think that's a good value point there to look at some of these bigger industrials there. Things like your commodities, like your BHPs and Rios, they'll often come back like 3/4 of the range. That's sort of they have those sort of bigger moves. We talk about, and we were talking about, Ramsay being V-shaped and Elders being V-shaped. Just the industrials there, sort of that's their normal personalities to sort of, everything around that 61.8 is a pretty decent retracement there. If you sort of bought the banks every time they come back 61.8 range in the ranges there, you're probably going to jag maybe 80% of the pullbacks. Some of them will go further. It's just an interesting level here. I just think, this is a good company there. You sort of come back to a pretty decent range here. So, probably more longer term investors out. I like this here right now. I did sort of sell into that strength there personally. So I'm probably looking to buy back this company there, which I really like.
Well, the final one for today's report got back into the healthcare space in a way. Clinuvel Pharmaceuticals, CUVL the ticker, CUV the ticker. This has just been one-way traffic for the last, 2 months or so. Black, heavy candles on the way down, daily chart. But it seems to, what you were saying before, the 0, 1, 2, 3, it seems to have been slowing, not 0, 1, 2, 3, the overlapping, seems to have been slowing in its pace and coming back to what you've marked here as a support line while we've had volume increasing. So could it be time for a change of character?
So I think it had either 16 or 17 days in a row, Chris, closing in a new low. Which, if anyone has looked at Tom DeMarks, he's sort of like, Tom DeMarks has got a DeMarks, signal there where things are usually around sort of 10 or 11 closes in a row or something there. Normally sort of be looking to sort of counter move that. So I don't think I've ever seen 16 or 17. I think it might be 16 days in a row there. I have to check that sort of second last day there. That might have been the 17th day. But yeah, I've never seen it before.
That's 18. I've just counted on the chart. There's 18 to the first spinning top kind of.
Is it? Okay. Yeah. Yeah. So yeah, quite amazing. Yeah, both down there. So you just don't see that. I mean, normally sort of 10 or 11 would be up there. So yeah, pretty decent move there. So yes, look at funny, broke out of that sort of descending wedge. You can come back for a retest, then had a decent rally there, but then it's had this massive decline there. So look, does have some history there, some big V shape there. It's probably, maybe, again, maybe being in the growth there is probably not helping the stock sort of maybe at high inflationary periods there. But, I thought the company reported reasonably well there. Pretty decent, growth numbers there. Pretty good actually net profit number too, actually, which is like a lot of them had some high revenues there, but, cost blowout there where this definitely wasn't the case for Clinuvel. Even, that, again, it's a bit like sort of corporate travel. They're pretty tightly managed, this one here, really sort of, pretty strong on the finances. They've been profitable for quite a few years for a biotech, which is, kind of rare. So I do like this company here. Just come back to that old level there. What's jumping out at me is that volume, Chris, as well. That volume really has picked up quite a bit here. So, when you see the stocks come back quite deep here, this many days, and you start to see the volume pick up there, that's usually a sign of accumulation, basically. So the market, someone's just sort of stepping in there. So, so most of the stocks that we'll cover today are sort of probably seeing a little bit of that increase in volume there, starting to see sort of signs of accumulation taking place. And that's what you want to see. So, big pullback there. I know probably bottom picking to a degree here, but yeah, maybe it's sort of one to wait for the turn here. But yeah, definitely some sort of signs of accumulation taking place here down here.
Well, there are really some good markets to look at on some large companies and good unpacking of the characteristics of the company to really understand how they behave, what sort of chart patterns they follow. So there's some really good insights that we've got for the week ahead. So any other chestnuts that you want to leave us with, Gary, or you've got enough crammed into this report that we can go back and rehash on your older reports for more insights?
No, look, the only thing sort of coming back to me, just, probably a reflection over the weekend there was just really to get back to, sticking with the leaders. So I think I've sort of maybe varied a little bit, just trying to, try and stick with those sort of, I've covered a few stocks here today. We're probably looking at, looking down the bottom here, which is probably not the best way to, probably good for investors to be looking at sort of that way. But in terms of sort of short-term trading, probably not the right avenue there. You probably want to see your strong stocks have that sort of move and then a bit of a contraction, a bit of a pause there on a lot of volumes there. So we have sort of showed a few of those in the last few weeks like that. So yeah, I'll probably just be sticking with the sort of quality end of the market here. But I guess from an investment point of view, I just think, that, everything just keeps taking me back to that investment profile of high inflation period. So we just stick to that. That's probably the blueprint here for the next sort of, possibly another 12 months here. We might be sort of seeing the same here. So, but yeah, look, there's a few still growth stocks out there doing pretty well. I think Xero is sort of, 360, MP1, and there's a few looking at Ticker Data's turned here as well. So a few of those are still pretty strong here. That doesn't sort of seem like where you should be, but those are still sort of pretty strong sort of charts there, and only having really sideways breathers there. So they are sort of showing leadership quality. So I still like some of those. So a few retailers are actually showing the same sort of thing as well. I think AX1, Baby Bunting sort of gone sideways here after having a bit of a rally. So there's a few retailers there that have sort of had a pretty good recovery, having a bit of a breather here. Still a bit of value there as well. So, but yeah, it's just, it's just a pretty messy period here at the moment. So, but yeah, we just stick to our guns and just get the plan right and stick to the plan.
They're very good points to round out on, and you've touched on a few things that you've covered before. You're talking about sticking with the leading companies. Definitely covered that last Friday. That's what you do on the Friday videos, top 30 momentum and launchpad companies. The leading themes, you mentioned retailers there. I know we're talking about it on a daily podcast. We're talking about the leading top 10 momentum companies and the top 10 themes. retail's been in the top 10 for the last week or so. So there's sort of the aspects that you're talking about. But we'll put on the right-hand side there the whole playlist of the Friday videos where you cover the top 30 momentum companies and Launchpad. They're definitely the market leaders. And then also, you've talked about that blueprint, the 40s and the 70s. There's a whole playlist of insights like that, including that inflation breakdown where you've covered your insights, where you've gone back and researched decades and decades of data to find out what should we be doing in this environment. And as you said, 2023 has just been continuing with those same earmarkers that you've put out 18 months ago from this very research. And then finally, we'll put on the left-hand side your old Twitter handle or X handle. And then we'll say thank you very much, Gary Glover from Novus Capital.